Biden's entire plan, the left's entire stimulus goal, now very much in jeopardy because of, dare I say, a total lack of leadership from the guy who's in the White House. Hello, everyone. Welcome to the Trish Regan Show. I am Trish. Quick reminder, do make sure you subscribe to this podcast, to this channel. Hit the subscribe button. Make sure you're downloading the full version, the full audio version on Spotify or on Apple iTunes, anywhere you get your podcast. And make sure you go to trishintel.com and sign up for my newsletter. But this is, my gosh, my free newsletter. This is unbelievable. He can't get anything to the finish line. I mean, when he does get it to the finish line, it's a total disaster. But as far as all the stimulus goes, you know, he wants his $3.5 trillion, dare I say, $0 stimulus plan, which is a total disaster, and I'll save that for a second. But the first up here is the $1 trillion deal that was a bipartisan deal, and he can't get it to second base because why? He has allowed the total extremists in the Democrat Party to take charge. And those extremists are making it so that he can't get darn thing done. I guess we should be happy, right? You know what? Government's not going to be able to spend our money. They're not going to be able to tax us anymore because they can't get out of their way. That's perhaps one of the beauties of all of this. Look, we're dealing with so many things right now, so many economic headwinds, whether it be inflation, whether it be concerns about a slowing economy in the midst of just a sky-high, very frothy stock market that may be coming down off the ledge, so to speak. We're going to get to that. But first, what happens then if there is no stimulus? I think we're absolutely fine. I'd like to see, by the way, let me qualify this by just saying that I do think that there is a reason for investing in bridges and roads and airports and infrastructure projects that we do actually need. I'm not totally against that. So in terms of the $1 trillion spending plan, which already, as I've said, is bipartisan, I think that Americans can accept and understand and appreciate that because we all know that there's lots of things crumbling out there that need fixing. But then when you start talking about $3.5 trillion for social stimulus, whether it be retrofitting of affordable housing, whether it be care for elderly, whether it be more child care, kindergarten. Look, a lot of these things are very noble, wonderful things. The reality is we don't know how to spend the money, and we're throwing money at things without really having a systematic plan for how to attack these issues. I'm not saying that, kindergarten, universal kindergarten is a bad thing. I think it probably is a wonderful thing. I'd like to see more investment in the schools. However, I don't want to just throw money at the public school system that winds up going down the drain. I mean, let me tell you, you just look at the inner city of Chicago where they've got lots of money for schools and you have a disastrous record there. And it shows you that money is not always the answer. There are other smarter ways that we could be addressing some of the challenges that our students have academically. And the answer is not to spend more money. What about this 5-year community college? Give me a break. 5 years in community college, we really need that. We need more of this wokeism infecting our population. No, I mean, there's many, again, smarter ways to go about equipping a generation for a changing workforce, a changing environment, more technology dependent. But the answer is not just to tax and spend, tax and spend. And so Americans get this. The $3.5 trillion, that's not going anywhere. Thank goodness we got some adults there, whether it be Christian Cinema or whether it be Joe Manchin, who really, the two of them are just coming out total heroes in this because they're willing to stand up against this insanity and actually stand for their principles. So I admire them. I respect them for doing that. But now they can't get the $1 trillion through because, you can't get the $3.5 trillion. Well, that's just the way it's going to be. And so this is what you call cutting off your nose to spite your face. And Joe Biden does not have the leadership chops to be able to figure this out. He has become too beholden, really, to the extreme left of the party. He was elected because he was a moderate. Don't forget this. When you look at the poll numbers right now and you see what a disaster they are, that's because Americans are saying, what the heck did we just wind up with? We thought we elected a moderate. We thought we elected someone who would be down the middle and be fair, and instead they're trying to shove all this nonsense towards us, including that withdrawal, that just horrific withdrawal from Afghanistan. The horror that you're seeing in the border with people by the tens of thousands pouring into this country and not being properly vetted, just being released into this country on the thinking that somehow they're going to show up at their hearing. I mean, this is not sitting well with independents. This is not sitting well with Americans. This is not sitting well with anybody right of center. And by the way, plenty of people left of center as well. So he's got a problem, and he either needs to be a man and stand up for what he actually believes, whatever that is. It's very unclear. You know, he told us he was moderate. So if he's not willing to stand up for American values, moderate American values, then you know what? He's going to keep getting shut down, because the leftists, the extremists, they're going to keep pulling this nonsense. And now he's not going to get his $1 trillion stimulus package through, let alone the $3.5 trillion, which he should not get through because we don't have the money. I mean, meanwhile, we're continuing to deal with mass inflation problems. You saw the PCE indicator just out the other day at a 30-year high, my goodness. All right, so this is the measurement that the Federal Reserve looks at to try and gauge where inflation is going to be. And it was well above 4%, which is more than double what the Federal Reserve would like to see. This was a 30-year high, okay? And it's consistently been at this level now for the last several months. This is not a good thing. I mean, you can't have that much inflation in the economy and expect that things are going to get better. You run the risk of stagflation, right, which we saw in the 1970s, and it feels like a weird deja vu in so many ways, except, you know, I think Carter's heart was in the right place. I don't get the sense that this president is really doing I don't get the sense that he has an inner core. Maybe I should put it that way, that it's like, who's Joe Biden? Who is he really? Because from economic policy to foreign policy to border policy, I don't think he understands who he is. And consequently, he's allowed the extremists on the most extreme edge of the party on the left to take over in a way that doesn't sit well with the people that elected him. So this is going to be increasingly a problem. Inflation is here, and it's getting worse. I mean, you just look at the producer price index that we saw recently, upwards of 8%. Those producer prices, that's what producers pay for goods and services, that's being carried over sooner or later to consumer prices. They've already been upwards of 5% for the last 4 months on record. Americans can't really handle this, especially when they're not making enough in terms of wages to be able to sustain their lifestyles with this higher inflationary pressure. Meanwhile, you've got to ask yourself where the market's going in the face of all this. And I'm going to get to that in just a minute. But first, I just want to point out that if you are worried about inflation like I am, then you probably need to be thinking about diversifying your portfolio. One of the best ways to do that, I still maintain, I've said this for years, is actually gold. Gold, because it holds its value and it helps hedge out some of those fluctuations that are attributable, of course, to a depreciating dollar. And as much as they're printing money, you can only anticipate that that dollar is going to continue depreciating over time. And so I just use this as an example. I mean, if you look at the purchasing power of a US dollar back in 1972 compared to today it's worth 15% of what it was in purchasing power back in 1972. So the value, again, is being eroded, and you need to plan for that, and you need to think through that. And again, I like precious metals. I especially like gold, and I continue to say this because I want you to look out for yourself and your future. So give my friends over at Legacy Precious Metals a call, legacypminvestments.com. They've been in business more than 40 years. They're going to help you figure out how much gold should be in your portfolio. And by the way, how you get it there. I mean, do you want the physical gold in your basement? Do you want it in a safe deposit box? How do you want to hold gold? It's an intricate process and can be somewhat intimidating. So go and get their free guide that you can download at legacypminvestments.com, or give them a ring. You can use my name. Tell them Trish sent you. 1-866-589-0560. 1-866-589-0560. If you are watching this video, it's right there on the screen. I put the number up for you. I encourage you to do that because, look, inflation is not going away. It's just the reality of where we are. And with an inflation gauge now, the PCE indicator at a 30-year high, you just have to recognize that it's here for good. And so then the next question becomes, what is October going to look like? I mean, a lot of people are starting to get rather nervous. You saw September, lousy month for the markets in September, ending off more than 4%. It's not yet enough, as I look at the yield, for example, on the 10-year Treasury, for me to say, okay, you want to just completely diversify out of equities. I mean, I'm also, keep in mind, very much a long-term believer in the overall health of America. As strange and awful as it's been recently, I'm still a believer in this country, and I still think it's the best game in town. I mean, where else are you going to put your money? Certainly not in China, certainly not in Europe. And so there aren't that many other places to be looking to invest. Yes, we have some problems, for sure. We have massive amounts of debt that nobody seems to be interested in paying off at all, which will continue to depreciate the dollar, hence the reason I like gold. But in terms of the economic fundamentals over the next several months, I think you could quite possibly see a little bit of a pullback, but still, it's not as though we're running into the risk of a recession. I mean, look, we should, given some of the things that Biden's been pulling, but I don't think we're at that recession territory just yet. And so, as a result, we will still get some growth, not what we've seen. Of course, we've had record growth, but that's in part a response to what we saw last year, right? So how would you not be doing so much better compared to the depths of what we saw during the height of the pandemic? So consequently, I think people need to look hard at their portfolios right now. It's quite possible that we will start to see some rotation out of maybe some of the growth-oriented stocks into more dividend plays, into things that people feel like are going to be more reliable in a more treacherous environment. And the environment could get increasingly treacherous. I mean, look, I'm not going to kid you. October is historically a pretty challenging month. Actually, I should point out September historically is actually the worst month on record. Everybody thinks October because you think of the stock market crash in 1929. October has this really, really bad reputation. But actually, if you look at what months have had the historical worst performances over time, it's typically September. So you could say maybe we're out of the woods. Then again, if you look at what some are saying, and by the way, Jeremy Siegel, who was well noted for his call of the housing bubble and what that would do to markets back ahead of the 2008 process, and then of course the housing bubble in 2000, the tech bubble in 2000. He was known for having called some of these very, very prominent problems. He's now saying that inflation actually could be what holds this market back. So just, I would say, stay cautious, stay nimble, be ready, because if we don't get the kind of growth that people are anticipating this earnings season, if we don't see earnings growing the way some investors had hoped and some expectations were banking on, right, in terms of these valuations on these companies, then you are going to start to see some risk. So there could be a pullback in October. I say that, again, just knowing that I personally want to still be invested, diversified in my investments, but invested for the long term. So keep an eye on all of that. Just a reminder, everybody, I do want to make sure that you are subscribed to the email. It's free. You get it every day delivered to your inbox. You get this podcast as well as all the stories I'm focused on and my team is focused on at trishintel.com. We've got all the intel on markets, politics, the economy, little lifestyle stuff in there too, a little something for everyone. But I appreciate you going and downloading that podcast on Apple iTunes, on Spotify, and subscribing to this newsletter, again, at trishintel.com. If you would, subscribe to the channel if you're watching on video, whether it be YouTube or Rumble, and know that I will be right back here again with you tomorrow. Thanks so much for tuning in.